That should not be key auction reversal, guys. Sorry, that should be iceberg or an elephant or a buy order. Okay, that's in essence what I'm going to explain to you. Now, the most important thing is that to be able to characterize what all three of these is, it comes down to the nature of volume. Okay, now in essence, an elephant or an iceberg order or a buy-side program is simply just a large institutional player, so a big influential player, someone that can move price around, that is ultimately executing a large order. Okay, now they can do this a number of ways. They can do it over a span of a couple of days, they could do it over a couple of hours, they could do it over a couple of minutes. Okay, the most important thing to understand about this is it all depends on the liquidity being provided. We've spoken about this a lot in previous streams, but in essence, what we're looking at is the market comes down into an area. And by the way, we can see this on the buy or the sell side. I'm going to lean on the buy side. So the market comes down into an area, and what we get is an initiation taken from a buy program. Okay, so a large institution steps in between prices, call it 61 and 70, and ultimately they're looking just to buy the market, take whatever liquidity the market will give to it. Okay, the minute the selling stops, the buyer then initiates to the upside. Okay, the market then comes back, the buyer reinitiates and reignites the buy order, and when the market stops selling and providing liquidity at those prices, it goes back up, and so forth and so forth. Okay, now, if you're a breakout trader, this can look particularly obnoxious, okay? It can actually look quite familiar to a lot of you, all right? But when you get these buy-side programs, you have to accept, ultimately, that only once this buy program is done will prices then be able to move lower, okay? And this is important because this brings us to this concept of price sensitivity. A large institution, okay, think of a big oil producer or a big platinum miner. They are not price sensitive, okay? The market, ultimately, they've got X amount of tons of, gold or oil or, gallons of oil. They've got X amount of produce that they need to hedge. In other words, they need to lock in prices, all right? So when they do this kind of business, price is irrelevant to them. All they're doing is phoning up the broker or their treasury department saying, look, we have X amount of oil coming, available in 3 months' time. We need you to hedge that exposure. Right? They then pick up the phone, they phone the Goldman Sachs, the JP Morgans, the broker, whatever it might be, and they execute that order. Okay, they're not too concerned with it being executed over, what price range or whatever. Obviously, it is in the broker's, best interest to execute at best price. But in essence, they're not too concerned about price. Okay, and that's important to understand because a lot of the time, when we have these big orders in the market, these big buy-side programs, we tend to fight against it. We tend to ignore what it actually represents. Okay. The most important thing is, whilst that order is in the market, prices aren't going to go down. Okay, prices are only going to be able to go up. Once that program is done, okay, then we've got what we call a vacuum. And this is the real key to this week's strategy. Okay, because this buy program has effectively created a vacuum. This buy program is not technically created, it's not speculative in nature, it's simply one big order that's being executed. Right? Once we take out and confirm that buy order is done, that vacuum needs to get filled out. Okay, and that's what creates relatively fast down moves once we break below the elephant, the iceberg, the buy-side program. Okay, so let's now move on to the examples I'm going to show you. The first one I'm going to do is I'm going to show you the Bund. Okay, a fantastic opportunity, and it came on Thursday. Now, ding, 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 Thursday was penultimate day of month end. Okay, so very typical. We see month end flows. Buy-side flows. Why? Because portfolios need to be rebalanced. In other words, bonds mature, portfolio managers have to buy bonds. Not why, not if, not maybe. They have to buy bonds. They don't have a choice. They have to rebalance and buy bonds. Okay, so let's see what that looks like and see, ultimately what this buy-side looks like on the footprint chart. Okay, so this is Thursday, and I'm going to take you back to around Thursday. It was the 30th of August. These are all 5-minute rotations. And I'm going to take you through the day so that you can kind of get a feeling for it. Okay, so cash market opens 8 a.m. and straight away off the gun. Okay, very unusual. We hadn't seen a drive for the entire week. Straight away off the gun, we see the buyers get to work. Okay, market moves from 20s all the way up to 36s. Now, a lot of you are saying, yes, that's not a big price move. Okay, well, it is, given that we hadn't seen a drive like this throughout the entire week. Okay. More importantly, it was the manner of execution. Note what the buyers did. Okay, 8 o'clock opens, and we get a surge straight to the upside. Straight away, sellers provide liquidity. What do buyers do? They take the liquidity. Okay, they don't back off. They go again. Again, we can see sellers providing liquidity. Buyers don't back off. Again, buyers go again. What are they doing? They're absorbing higher and higher prices. Why? Because they want and need the liquidity. Okay. Fortunately, someone was providing it. That's why prices didn't catapult a lot higher. In essence, in the first half an hour of trade, we've suddenly done 27,000 contracts of volume. Now, historically, if you go back over the entire week and look from 8 to 8:30, you're not going to see this kind of volume. Right? This is that first clue. This is that the buyers are in the market, not only through the volume trader, but also the manner in which they're executing. So that's our buy-side program. The market then moves sideways, i.e. sellers provide liquidity, buyers back off for an hour. Buyers re-enter. Market catapults again. Now notice the change in volume. Nothing happening. From 8:50 to 9:10, nothing happens. Suddenly, we execute another 35,000 contracts in 15 minutes. Okay, again, buyers reignite that buy program. And market rotates higher. Any bit of selling, gets met with absorption from the buyers. And once again, the buyers start to hold higher prices. Okay, now I'm going to move this sideways. One thing you will notice, and I'll show this on a 5-minute chart. Market then comes a little bit lower, and as soon as that market comes a little bit lower, those buyers latch on, and we start to see a rotation higher. Okay, now what I'm going to do is I'm going to show this to you very briefly on the footprint, but then I'm going to move it onto a 5-minute so you can annotate a little bit better. But what you tend to see, and it's actually easier, let me get the 5-minute chart up quickly. Okay, it's actually easier to see this on a candlestick, so I can show you the little buckets. Okay, so what you got, market opens, drives. We get the sideways bucket. Okay, here comes the second bit of flow. Notice the drive, so straight line bit, very directional flow. Eventually, we get the sideways bucket, and again, sideways bucket. So we got 3 bits of buying over the course of the day. On the open, the first pullback, the second rotation, and into the close. 3 bits of buy program went through the market through the entire session. So what does that mean for us? Well, coming in there next day, we know that buy program's there. Why? Because of month end. So the first thing we're looking to do is buy where that last bucket was created. Now, again, I'm just going to show this to you very briefly. But if we look, the last bucket was created 80s to 92s. And what did we see between 80s and 92s on Friday? First time, got bought up. Second time, got bought up. Third time, got bought up. Okay, nice 40-tick rally in the end, and month end is finished. So that's it, guys. That's what a buy program looks like. Now, I want to take it and I want to show it to you what it looks like on the oil market, okay? Because in essence, we got the exact same thing in the oil market for Thursday and Friday. Now, again, why it happens? Maybe big producers. Who knows why? Okay, the important thing is that the opportunity exists for that buy program. Okay, so this is Thursday around 2:30. Again, this is around just after the pit session open, and we can see straight away market opens on the pit. And 57s to 61 starts to provide a bit of sideways movement. Okay, high volume. Note the substantially higher volume around this area. So 57s all the way up to sort of 77s starts to provide a bucket or quite a lot of absorption. I'm going to move forward. We come down there again almost 2 hours later, and what do we see? Market continues to move sideways in the 61 to 77 bucket. Okay, I'm going to then rotate. I'm going to move this all the way up onto the next day, so Friday session. Okay, and if you keep scrolling, I'm just going to scroll this across. If you keep scrolling, notice again, around at 10:55, market comes down to that bucket, 61s to 77s. Market moves sideways. And again, at 12:25, the market catapults higher off that. And then again, into the later end of the afternoon, market comes back down to 61. Straight away, market moves sideways. So again, we've seen, not just in the Bunds, but we've seen in the oil market, there is a bucket or a buy-side program that keeps initiating around the 61 to 77 area. Now, I'm not going to go through the individual rotations, right? But what you're going to see as a perfect example is you're going to see lots of dark colors being absorbed. So, as an example, on the Thursday, notice how we get all these dark colors in and around the low. Okay, lots of sell activity. Someone is selling it, but the buyer's willing to take it all and some. And that's the clue, guys. That's how you know when a market cannot break out on high volume. It's telling you that someone even bigger is sitting there absorbing the market, holding the market. Now, in order for something to be considered a buy program or an elephant or an iceberg, it needs to be continuous, not just once off. Okay? Why? Because big programs don't take 5 minutes to finish. Right? They're done over a couple of hours. Right? In the example of the German Bunds, in the example of the oil, it's been done over a number of days. Now, let's go and have a look and see what this opportunity presents for us, because this is the real key, and this is our execution I wanted to talk to you about. Now, if you get a profile up of the oil, okay, and you open it up, I'm going to do it on both days so you can see it. Notice 54s to 64s on Thursday, okay, provided 1, 2, 3, 4 TPO support. 4 or 5 times the market came down here on a half-hour rotation, couldn't break through. On the Friday, once, twice, 3 times, 4 times, 5 times. On Friday, could not break below 54s to 64s. Okay, so our play for Monday morning, first thing, yes, it's a bank holiday, but our play is to look for a confirmed break below 64, i.e., once we get below those 64s, the buying is complete. Right? When that buying is complete, like I said, there is a vacuum below. Right? There's a lot of positions now that will tend to unwind once that elephant breaks, once that buy order is complete. Below 64s and the vacuum all the way down to 68.80 should be complete. In other words, we've got a good, depending on how you trade it, if you're a leverage trader, you're probably targeting 35, 36 ticks down to 69.30. If you're playing more of a swing trade, okay, you're looking for 69.64 all the way down to 68.60. So short-term trade, 30 ticks, a little bit of a swing trade, you're looking at 80, 90 ticks, guys, that you can take out of this trade just being observant. Now, on the profile, okay, if you get a weekly profile up, this is what that vacuum looks like. Okay, it looks like a big double distribution. Now, this strategy is discussed extensively in the volume profile course. If you haven't taken it, I highly recommend you do. But we talk about the strategy, we talk about the execution, the methodology, why it occurs, how you execute, how you make money out of it. In essence, guys, the summary of it. By the end of this week, i.e., back towards the 9th of September, what you should see is this entire low volume area should now become a high volume area. Okay, so don't be surprised to see oil have an inside week this week, or at least fill out quite extensively from 68.80 all the way up to 69.70. Okay, that's our play then for the week, guys. That's what we focused on.